Gamestop has reported its fourth quarter results. Let's go to Cory Johnson. He's chief market strategist at Epistrophy Capital Research. Cory, thanks for joining us today. I've just been looking at the numbers quickly. Gamestop reported net sales for the fourth quarter of $1.28 billion. I think the estimate was 1.36, but it's not a surprise to most that they disappointed.
Yeah, I think the street was actually 1.4. I was at 1.36, and they had a lousy quarter in top line. They cut their expenses really significantly, and although SG&A, sales and general administrative costs, were 22% of revenues, and that's worse than the 20% it was last year, I think they cut them maybe more aggressively than people would have expected. So the 30 cents per share was much better than the 7 cents that I had guessed and the 8 cents that Wall Street had guessed. But that's not the news. The news is that they put out a separate press release. They don't do a conference call. We don't get much information. They said, just check our 10K, and they haven't even filed their 10K yet, but they put out a second press release. And it said that they have, the board has unanimously approved the use of Bitcoin as a treasury asset. So this is a company, a few $1 billion in cash, and cash and other assets. Well, some of those assets now are going to be Bitcoin, and that got the stock up in after-hours trading.
Okay, so do you think that is a good move for them? I know this was a consideration. Some people were putting that out there ahead of the earnings report today. But what do you think of the move?
Well, and there were also a hedge fund that actually, there were two clues we got. I'll tell you what I think about it, I promise. But there are two clues that we got. One is that we saw the CEO, Ryan Cohen, with Michael Saylor, the CEO of MicroStrategy, who famously has the largest pile of Bitcoin as a treasury asset for MicroStrategy. So there was no caption, there was no explanation, but he thought, I wonder what these guys are talking about. And then a hedge fund wrote a letter to the board and made that letter public, or Ryan Cohen made that letter public through a social media post saying that they were being asked to do this by an outside investor. So what do I think of it? I think it would have been, history tells us that it would have been a better idea to do in September than it is right now. But now you're asking me to pick the price of Bitcoin, and that I cannot do. But that is what this company is doing. And certainly, this stock is so divorced from the prospects of this business. The stock price, put another way, does not reflect what's happening to this business that is dying. This business of selling game consoles and games in stores and malls and wherever the GameStop stores are is dying. They're getting out of leases. When the leases go out, they're closing down stores. Their revenues are falling dramatically. Their hardware sales were about half of what they were 3 years ago and continue to decline. Gamers, we estimate that gamers are buying physical games. Only about 10.5% of all games sold are physical games. The digital downloads are so easy to do on the console. You don't have to go to GameStop store to download them because the console makes it so easy. So it's a lousy business that is going away, and they haven't really given us any indication of what they want to do. So moving a treasury asset from cash or from bonds into Bitcoin still isn't a business. So I don't know what you get when you get GameStop shares.
You answered my question, which was, is there a future in hardware and software as a core business for them? Obviously, no. What about collectibles? How are they doing there?
It's a higher margin business, but it's not big enough to make up what they're losing in the game side. So collectibles just hasn't been the big thing. That it's not enough to make up for what they've lost with games and game systems. Okay. And to be clear, hardware and game systems are more important to this company than actual games themselves. And there haven't been big new console releases anytime in the recent past, nor are there going to be any in the near future.
You mentioned they're closing stores. They're closing a lot of stores overseas, trying to focus, I guess, more on North America. Is that the right move, or do they need to go farther in cuts that way?
I think that this is a buggy whip company. This company is selling a product that people increasingly don't want. Do they want game console systems? Sure. Do they want to buy games in a store? No. Do they want collectibles? It's not showing up in size. Revenues are falling dramatically on the top line for this company, and they did a good job of cutting costs. They're still not quite where they need to be yet.
Okay, let's talk about a partnership they are entering into with Zipco. What does that get them?
So that's essentially a payment over time system. So it's going to let people who buy their games or buy game systems have sort of more access to financing. But again, this is not something that's moving the needle much, and we can see it in these results. It's just, to make the games a little bit cheaper for some of their buyers, or a little bit more accessible, I should say. It actually makes them more expensive. Maybe, on the margin might add a little bit to their declining sales, but sales are still in a free fall.
Okay, so they don't really have forward guidance, is my understanding. Is anybody...
No guidance.
No guidance.
No conference
call.
Is
anybody talking... Is anybody talking about what they plan to do? I mean, if you mentioned they don't give a call, but they are sort of have their feelers out here and there. Is there something else they're trying out besides crypto, or is crypto the way forward as far as we know right now?
It's all about imagination. What do you imagine they might want to do? And if you go on the bulletin boards and Reddit or on stock twits, you see all kinds of suggestions, even people sitting convinced they know what the company is going to do. What they're doing isn't working. What they're doing isn't good to help grow a business here. So what they might do could be anything. Strangely, it's kind of like the conversation about the tariffs. We don't really know what's going to happen, but the reaction in the short term, the stock market's doing the opposite thing of the economy. The economies in Canada, as you guys talk about all day, in Canada and in the US, are reacting to the threat of something that might happen in the future. The stock of Gamestop is reacting in a different way, positively, to the threat of something that might happen in the future, but we just don't know what that is.
And you mentioned tariffs. They don't really have any effect on this particular company. I mean, clearly, if discretionary spending goes down because people are worried about the economy, then they're spending even less on sort of games and hardware. But as you said, they're not spending that much in that market anyway.
Well, and what's interesting, too, about the tariffs, and I know, again, you guys have been talking about this, but there's a suggestion out of the Trump White House that some businesses might be exempt. It starts to sound like some, getting away around the tariffs might be for sale in the White House. I don't mean in an illegal way, but if President Trump someone curries favor with him, they might find themselves exempt from certain tariffs that are affecting other businesses. And that's going to be a really ugly business. But we have no indication that games or electronics are going to be part of that.
All right, Cory Johnson, so I got to leave it there. Appreciate your time on this. Thanks very much.